Good morning and welcome to GrainTV. It's September 20th, 2012. To my left is Logan Burgess and I'm Brock. We have a couple of bits of information weighing on the markets this morning. Weak economic data out of Japan and Europe, as well as the USDA export sales report. Let's turn over to Fire Tip to see what's happening in Chicago. As you can see here, corn and soybeans are both down. Soybeans the leader to the downside, down about 14 3/4. Wheat in Chicago and Kansas City both positive this morning, a little bit different than what's going on in the corn and soybean pit. But let's turn our attention back to the daily soybean chart that we've been paying attention to for the last couple of days, as a severe battleground is shaping up around that 1645 area.
Right.
As you can see here on this chart, the area of 1645 we've been talking about as a support level. We once again tested it a couple times this morning. That's the top end of the range that was printed between the late part of July to the late part of August. I think this is continued to be a battleground as we move forward through today's session and the next coming sessions. If we happen to fall below that level and close below that level, I think it really opens the downside to a lot more selling.
Right, you know, kind of right now it looks like we might be establishing the bottom of a range here that we might trade for a while. One thing that's going to weigh on the soybean complex, though, is the dollar index strengthening sharply here today. Here's a dollar index chart for December delivery. Dollar index basically compares the US dollar to 6 major currencies. The euro and the yen are two of the largest ones in that basket there. And as you can see here, basically QE3's effect on the dollar index here. We sold off sharply after the announcement of QE3, but here it looks like we're finally starting to find a bottom. This is the largest update that we've seen, about half a point higher, which is a large move on the dollar index. About half a point higher here in today's action, so that's certainly good to see for the dollar index, but certainly it's going to be important here for export sales moving forward. A stronger dollar is not good for U.S. price because it does limit export sales, and export sales were reported this morning here from the USDA. If we take a look at what we saw in that report, as you can see here, the middle column were the market expectations. The right column here is what we actually saw reported this morning. Corn well below market expectations, coming in at 69,000 metric tons. You know, Brock, we saw a lot of cancellations out of today's report. Totally different story out of soybeans, 712,000 metric tons there at the high end of expectations, and wheat coming in right in line with expectations. You know, we've been talking about this for a while here, Brock. Really the difference in demand destruction between the corn and soybean complex right now, I think that was really reflected in this report here. Demand for corn is starting to wane. Demand for soybeans, U.S. soybeans in particular, remains quite strong. We're going to have to keep an eye on that here moving forward. Obviously, it has large impacts for price. One thing that's going to be a large part of the demand equation here moving forward is demand out of the ethanol sector. Brock, I know you took a look at some data released yesterday. What's going on there?
Yeah, the Energy Information Administration came out with their weekly ethanol update for the week of September 14th. What we saw out of that was production actually increased again this week, up about 2.2%. We're still quite a bit below where we were last year at this time, behind last year's pace by 4.3%. So that's a little bit concerning compared to last year, but it is good to see some upticks in the production. That is actually the highest production we've had in the last 11 weeks. Stocks also increased last week, up about 2%, and we're up 12.6% from where we were last year at this time. So that's a little bit concerning. If production does slow down, we have plenty of stocks to make up for that. That's going to be something we have to pay attention to moving forward. The thing I would like to note here, though, is how much corn is actually being used for ethanol production. We're using about 87.6 million bushels last week. That's slightly ahead of what the USDA is currently projecting. So if we do continue on this pace, we will meet the USDA projections for this year for ethanol use of corn.
Absolutely. Well, that's kind of what we're looking at here today. Things to keep on your radar. Tomorrow we will be getting the cattle on feed report. Additionally, we'll be getting numbers out from Informa on crop production estimates. The big thing that will be watched closely there is the acreage, the harvested acreage expectation. If we remember back to the September 12th WASDE report, the USDA didn't touch that number at all. It'll be interesting to see what Informa comes out with tomorrow. In the meantime here, we'll be tweeting about the markets as they trade live, and this afternoon you can catch Brock on AgWeb Radio for the market close. That wraps up our show here for this morning. Thanks a lot for joining us. We'll see you tomorrow.